The next 90 days could change your life in crypto, but you need to act very, very quickly and you need to get into the right positions at the right time. And the window of opportunity is beginning to close when it comes to these crypto markets. In today's show, we'll have a look at why that is the case, which coins are most likely going to be the top performers, and what you can expect next for the crypto markets. Make sure you smash the like button, hit the bell notification, and subscribe to the channel. Let's start off as usual with the banter bubbles over here. Just having a look at some of the top performers. You can see NEAR making a big bounce over here on the hourly. If you look at the daily time frame, we have TAO up as well, HNT. So we are seeing a little bit of a narrative within the AI sector. Render up, FET up as well. So a lot to look at. Meme coins and AI seem to be the leading drivers and will most likely continue to be so, or be the case at least through the next part of the cycle. So major economic impact events coming up. It's not a major one, but we do have PMI, which is coming out later on today. That's 5:45 p.m. That's my time. So probably a couple of hours into the US stock market open, depending on where in the world you are. And the expectation would be that that should bring a moderate amount of volatility back into the market. So we'll keep an eye out on that. We're still waiting for the breakdown on the DXY, that being the dollar index. We've already started to show those major signs of distribution. And if we look at this on the daily time frame, we've been tracking it pretty much to a T ever since the top over here, looking at the breakdown coming into the top side over here, which was a major key level resistance zone, then a support zone. Now we're looking to flip that back into resistance and breaking down this phase over here. So zooming in and looking at it on a little bit more of a granular scale, this becomes the acceleration zone where you break below that 100.55 as soon as we can get it below that. But you can see this is acting as temporary support. So there may be a short-term bounce over here in alignment with that PMI data, which is going to be coming out later today. If that does occur and it creates a little bit of a pullback in crypto, that's going to be an opportunity to load up again and look for the next breakout. I'm going to show you the levels on the lower time frame, what you can be looking at. Most notably, it's going to be around that $60,000 zone, give or take. So here's our trade that we're in on gold, the XAU chart, pushing towards the upside. At this point, we've taken 33% profits, 1/3 of the way through, and we've left the other 66% to ride all the way to the top over here, with a measured move going up to $2,773 per ounce of gold. So continue to hold this trade. We're more than halfway through over here. If you are in whale room and you took this trade with us and you're looking to shave a bit more profits, feel free to do so. I've taken the 33%, the rest I'm just going to continue to hold over here. So all in all, that's looking good. We can see the volatility index did its job. Remember, we had the third largest spike that ever occurred on the at least the VIX chart over here, which measures the volatility of the S&P 500, that being the stock market. The third highest spike that came in on the yen cash and carry trade as it was unwinding. We spoke about why that's likely a major opportunity to get exposure into the market and unwarranted fear, and it probably wasn't going to unwind right now. It will eventually, but likely only in a year or two. And this is exactly what's taken place, right? So the previous data points that we have to compare with happened over here in 2008, where we did get the big spike up, and that pretty much marked the bottom. And then as the VIX started to grind back down over here, that created the next major bull run. The same thing occurred over here in 2020, pretty much marking the exact bottom. As the VIX continued to grind towards the downside, what happened to the S&P 500? Rallying onwards and upwards. And now you can see over here, the same thing is taking place, right? The VIX is starting to squeeze back down and the stock market is pushing up higher and higher. And we're expecting a catch-up trade for Bitcoin, catching up both to the gold chart as well as to the stock market over here. And there it is, right? This is the 18.6-year real estate cycle. But looking at it from the viewpoint of the stock market, since crypto is most correlated to the stock market, we start off over here in 2011, and we marked off how the election phases have affected the stock market and how you typically see those major moves running towards the upside. Now, we'll remind you that we're expecting this to come to its end probably some point in 2025, give or take. Now, you have to give quite a lot of leeway over here. It could be the middle of 2025 or could even be pushing into 2026. But at the end of the day, you have the stock markets rallying on up here, and we are about to come into the next major election phase, right? Which is coming in on the 5th of November, give or take. It's around there. And we've seen previously what happened, right? Election phase and onwards and upwards, election phase, onwards and upwards, election phase, onwards and upwards. So looking at that correlation over there, looking at the prior data, this should signify a continued move over here. And now it's probably not the time to be stepping in front of a steam train, which is rallying onwards and upwards. You can see the fear and greed index on the stock market pushing up to 63. So as we move into new all-time highs, only just moving from that neutral this week now into the greed zone, hitting that 63, haven't even yet reached that extreme greed scenario, which we'd expect towards the end of the overall cycle. So S&P 500 on the top left, NASDAQ on the top right over here, you can see slightly lagging, not yet putting in the new all-time highs, but likely to put those in the next coming weeks. We have the Dow Jones at the highest closing price it's ever seen once again, and trading at the highest levels it's ever seen once again on a week basis. That is on this weekly candle over here. And then we have Coinbase, similar to crypto, still lagging. For those of you out there looking for, a kind of proxy play to the altcoin sector, you don't want to pick a needle in a haystack. You're conservative, maybe you have a huge account, massive capital to allocate. This becomes a safe play, an opportunity for you to allocate into the altcoin sector by buying the picks and shovels, right? So still at a pretty decent level. We'd expect this to play out similar to Bitcoin, right? Putting in some sort of a blow-off top towards the end of the cycle. And you can see the crypto fear and greed still sitting at neutral, of course, supporting how it's lagging both gold and the stock market, right? Remember, when we look at the fear and greed over here, and the stock market sitting at 63, Bitcoin at 50, you can expect when Bitcoin starts to push above $68,000, which is going to be the next big area of resistance, well, this is where this will start to move into that greed zone once again. So all in all, we're coming off very, very low volatility. As you can see, the Bollinger Band with percentile squeezing back down. We spoke about this. You got your huge cup and handle formation over here on the weekly and on the monthly scale, and this is forming the handle portion. So waiting to flip these areas into support. This is your prior tops, right? The major top that occurred before this top over here. You had the double top scenario in 2021, and then we breached temporarily above this level in March. Failed, struggled around there, oscillated above, below, above, below, above, below. And eventually, when you do flip this level, most notably $69,000, the key zone that I'm looking at to flip into major support. Once you do that, I don't believe that you'll come back down below those levels until the end of the bull run, when you go back into the depth of the next bear market. So it's definitely getting very, very interesting within the markets at the moment. And I think it's time to sit forward and pay attention, right? Because it doesn't matter which way you slice the cake over here. Anything that you look at suggests that the next big move is brewing, because you can look over here at the average true range. Every time we've come into this trend line over here, we have marked major moves, showing you that those ranges, the average true range, is getting tighter and tighter and tighter, and you can only hold that low volatility for a certain amount of time before you begin to expand. As soon as we do start to expand off of that low volatility, the expectation would be that you're going to see new retail coming back into the market. And many of you wonder, where's the money going to come from? How are the crypto markets going to go up when there's no retail here? The retail will come. They always come. I know you're retail. I'm also retail, but we consider you to be in the top 5% of the smartest retail that's out there, because most of you have been here time and time again. You never left. But for the guys that do leave and only come back towards those peaks, expect that they will return in a big way, and we'll be able to gauge this using the YouTube views over here with a marked spike up. And you can see if we zoom into this region over here, it's still trending down, right? So there's been a real lack of interest and apathy within the market from a retail perspective. It's predominantly been driven up by smart money, as well as the institutions which continue to buy Bitcoin for the ETFs, right? So this is something to pay a lot of attention to, because this will help us to identify as well when you get those market cycle tops. So keep your eye on the ball, right? We've spoken about as well the Bitfinex whales, which continue to bid price towards the upside and have ever since the lows. And this paints a different picture to what you're seeing on the other exchanges, which are open interest declining, right? They are not buying up a crypto. They are not optimistic about the future. They scared money, and consequently, this is coming down. So in alignment with the YouTube views picking up, we should see the open interest on other exchanges also increase towards the top side. So There it is, high time frame, 2-month scale. We're still waiting. This takes time, right? As soon as you get a 2-month candle closing above this level, you can say with high probability that you've broken out. At the end of the day, if this were a 5-minute chart, would you be bullish or bearish? That is the question. And personally, if this were a 5-minute chart, I'd be incredibly bullish at these levels because it looks like you're consolidating right at a high. And when you consolidate at a high, it usually leads to very violent breakouts towards the upside, which means that you want to be allocated into the market and not sidelined. And there is ways that you can allocate in a responsible fashion. We'll be discussing this as well today on the Whale Room live session, on the live Zoom session that we're going to be doing, which is going to be at what time is that? At least in Dubai time, it's going to be, I think it's 5 p.m. or is it 3 p.m.? 3 p.m. Dubai time. So if you do want to join into that, please do make sure you get into Whale Room. Now, looking at the weekly scale over here as well, very, very strong weekly close. I expect that in the next week or two, so over the next 14 days, we should see this candle push towards the upside. My expectation is a little bit more chop and volatility. You could even come all the way back down to about $61,000 to fill some of this region over here, and then look for eventually this to springboard price up and take out these levels. We're yet to create a higher high, just to be clear. On the weekly scale, theoretically, these are still lower highs in the making. Where does your first higher high come into play? Well, if you can start to break above $65,050, you have your stochastic RSI, which is currently playing price out towards the upside, and that's currently rising. Remember, we had a look at the statistics of this and how prices reacted off of the stochastic RSI reset in the prior times within this bull run. And what we noticed was it was double digits, right? We had only 2 out of the 13 reads that were failures and didn't work out. And one of the failures was actually most recently, where you ended up coming back down. So off this low, you came back down and breached below that level. It didn't result in anything. So the chances of getting back-to-back failures is very, very unlikely when you look at something like that. And therefore, the expectation has been onwards and upwards. So your bullish hopium dealer is here, keeping your hopes alive for you. Make sure you smash the like button if that does assist you. Okay. Now, looking at this key level over here as well, you can see this is why the $69,000 zone is so important. We spent a number of months attempting to get through this level. We spoke about this a lot at the time, suggesting that if bulls can't flip this into support with this number of attempts and this many failures, well, ultimately, it's like troops on a battlefield at the enemy line. They'll be forced to retreat, regather the troops, and then hopefully try and strike again. And that's exactly what we've seen, right? So they retraced, regathered the troops, and now they're looking to strike again. The chances of breaking through this level now become increasingly higher since you've weakened this level, right? Like soldiers on the enemy line, they've weakened their troops as well at the 69K level, and you would expect that now they're going to start to break through. What's more important over here is you're starting to gain above all of these different moving averages, the 3, the 9, and the 30, and you're starting to angle them towards the upside. That brings momentum back into the market. So all in all, that's looking good for Bitcoin. Let's quickly see the same chart, but on Ethereum. Ethereum, of course, lagging quite a lot, right? You can see Bitcoin's already reclaimed all of those moving averages. Ethereum is still stuck quite far below the 30 MA, so still weak in comparison to Bitcoin, but could possibly soon be putting in a bottom. We'll look at that in a moment. Now, Bitcoin is currently struggling over here with the 200-day moving average. This is going to become a meme within the market. You'll see it tweeted about everywhere. You'll see it posted about everywhere. And it is significant, but it's becoming less significant over time because crypto keeps spending time underneath these levels, whereas in price cycles, we never really spent much time below that. So I don't think that the 200 MA is going to be as significant in the future as what it has been in the past, right? In the past, we used it very, very well. Actually, one of the big longs that I formed over here was actually off of this 200 MA. This was the USDC-D peg at $19,200, where I went fully 100% long, with the initial longs actually taken down here at 17,000 when you're breaking the falling wedge, reclaiming the bottom side of the range, and then you recaptured this MA. So at this point in the cycle, I would expect that, this still presents an opportunity. Eventually, we're going to trade back above it, and it's going to be angled onwards and upwards. Right now, we're above the pivot level. We're above the 9 and the 18 EMA, and that means that bulls do have the opportunity to take control. Now, what you're going to be looking for is multiple candle closes above the 200 MA. That should provide the momentum to create the higher high and take out all of this liquidity over here, which has been a 6-month actually just a little bit longer than a 6-month downtrend over here, and they'll bring new optimism into the market. We've been looking for quite a long time at the Wyckoff accumulation schematic, which seems to be in play. Right now, we're transitioning from phase C into phase D. As you can see, phase D should break you outside the top part of the range, which if you look at this chart again over here, breaking you above the top side of the range would mean you'd be trading pretty close to all-time highs, somewhere around that $72,000 to $73,000 region. And then you're probably going to have one more pullback, which will be your last point of supply. That will be the final buy the dip opportunity. Right now, we're pretty close to the final buy the dip opportunity, but if you're lucky, you may get one more. So for those of you that are very scared, very conservative, you're more than welcome to wait for the break of structure to create a higher high on the daily and the weekly time frame, and then you'll look to purchase the next high low. But what you have to understand is that sometimes you can get a runaway market where maybe, just maybe, it's an explosive breakout and you don't get that opportunity. As long as you understand that, then you should be okay going forward into the rest of the market, because we've been looking at this as a major inflection point for months now. And you can see this is where I said you'll start to see the action come back into the market. And that's exactly what's taking place, right? So the plan is following along to perfection over here. 160 days post-halving, and then 680 to 685 days since the cycle low is where all the prior cycles started to mark up aggressively. And we're very, very close to that point in time. So to mark out how far away we are, well, it's 4 days to the first checkpoint. It is 8 days to the second checkpoint. And in a further distant scenario, you're 13 days from the third and final checkpoint, which is where we expect prices at that point to already possibly be trading near all-time highs. At least this is what the evidence suggests, which means you have around 14 days, right? And once the market gets going, it gets going very, very quickly. So please do understand that. Now, if you look at the lower time frames, like the 4-hour chart, what we had to look at on the last show that I did, which I believe was on Friday or Saturday, I can't remember which one we showcased this, but we spoke about the shallow fib, the 0.382, the orange line over here, being the level where if this is a strong trading market, you would expect support to be found. You can see missed it by a slight tick over there. Support was found over here. Price started to rally towards the upside. If you look at Ethereum, well, Ethereum didn't actually even get closer in the shorter term. Ethereum has been showing quite a lot of strength. You have a bit of an inefficiency candle over here, so you may pull back a little bit into that fair value gap. That could be as low as 2,595 for ETH, and then start to push back towards the upside. So a lot to look at. What's important about Bitcoin over here is you're flipping the mid-range, which is the white line over here on the 4-hour time frame, into support in alignment with that 0.382 fib retracement level. And this becomes a trade opportunity where you'd be looking for longs to trade them all the way up towards these highs. That's for short-term traders, right? Now, there is some liquidity of $16 million worth of liquidity situated down here at $62,000, which is why if you do see a pullback into that zone, probably presents an opportunity. And then on the top side, in the short term, you have 65K as the upside liquidity, where price will be oscillating between those two levels. Now, you're seeing continuous short squeeze after short squeeze. You can see over here, in terms of the red line, these are shorts getting squeezed out of the market. And every time they get squeezed out the market, price seems to drive up. You can see over there, you get the next increase over here in open interest. They get flush, open interest rebuilds up, price moves towards the upside. And as it currently stands, that's what's creating these upward moves. Is there's players, whether they're doing it strategically as a hedge or whether it's just retail that continue to short the market, at the end of the day, this is what's putting that upside liquidity, and it's helping the market to move up in a systematic step-by-step process, which is why in Whale Room, we keep taking these short-term trades. We're absolutely crushing it. You can see over here, up on near 162%, up on render, 134%. This is from one of our traders that actually work in Whale Room. So our traders over here, we have Josh, we have 𝗕𝗤𝗕𝗓𝗓, we have 𝗕𝗤𝗓𝗕𝗓, and then we have Farouk and myself. You can see one of the trades over here, really, really good. You have also from Josh up on Arweave 63% over there. You have Farouk up 170% on ENA. Guys, jump in there if you are looking for quick short-term trades. Those are in there. And then also to let you know, I did drop yesterday my entire crypto portfolio, what I'm going to be holding for the rest of the bull run until we hit peak euphoria, until the blow off top occurs. I'm going to be holding these positions. I did put that in Whale Room. There's a link in the description below. If you do want to join, just go through to YouTube over here, go through to the description, and then simply click Whale Room. It will take you through to this page. Click there, sign up. I mean, it's well worth it. If you don't want to join in there, maybe $99 for some reason is too much for you, and you're doing a paper traded account. If that is the case and you're still learning and you're doing a paper traded account, you can also come through here and you can click on Whale School, right? Because this one is free. You don't have to pay 1 cent for this. It's my gift to you. You have 2 days, 5 hours left to join into the next cohort. Click sign up over here, hop in, make sure that you join, fill in the details, and you should be able to get into Whale School for this next cohort while the spots are still available. All right, let's continue on over here. Now, when alt season? That is the question, right? When alt season? Well, if you look at this over here, you can see that still the market is too scared to bid altcoins. They're even too scared to bid Bitcoin, right? But if you look at the altcoin sector, it's neutral to even negative in some cases on some of the coins, meaning that market participants are constantly going short. So you can see when you do get into that extreme greed, like we saw in February, March, even parts of April over here, it doesn't last very long. So you want to establish your positions before that comes. When this comes, this typically marks local tops, and this is actually when you want to be scaling out of positions. So as it currently stands, where are we at right now? Well, you can see over here, we are literally in negative funding environment to positive, right? This is probably, or neutral to negative, excuse me. This is where you want to be establishing those positions. Now, if you look at the total crypto market cap as well, I'm going to look at total 1, 2, and 3. Remember, total refers to the overall market cap. We're sitting at back above that all-important psychological $2 trillion level. Your break-off structure will be coming very soon, where you're going to create your first high. That comes in at $2.24 trillion. But what's more important is, again, that timing aspect. From the halving cycle to the peak was 547 days. From the halving cycle to the peak was 547 days. Where would this put price? Well, 547 days later takes you to the 13th of October, which means you have just a little over 1 year where you want to be holding those positions. And you probably have 3 more months to establish those positions if you're conservative, right? If you want to scale in slowly, altcoins likely start to outperform Bitcoin entirely. Remember, alt season is defined by where the top, or at least 90 coins, will be outperforming Bitcoin over 90 days. Now, that likely occurs sometime by next year, which means over the next 90 days, you want to establish those altcoin positions, which is why I dropped my portfolio in the Whale Room Discord. So what you're looking at over here is continuation. You can wait for the high, then the next dip becomes the opportunity. So that is for total 1, right? If you look at total 2, it's showing exactly the same thing, right? Total 2 will start to break out above 975 billion. And if you look at total 3 over here, well, you're currently in this massive bull flag, caught in the parallel channel, moving towards the downside. This was the major support down here. I'm less inclined to believe that we'll come back to these levels. I'm more inclined to believe that this wick over here is going to be the major low, and you should soon start to breach the zone. When you get into the premium zone over here, you're going to start to increase the pressure into the market. You're going to see bulls coming back very quickly, and that grind into resistance could lead to the breakout, sending total 3 up to 1.23 trillion. Total 3 is all the other coins minus Bitcoin minus ETH, which is your altcoin sector, and you're looking at least 102% move over here, which means that establishing positions now, even you could with high probability double your money, right? So a lot to look at over there. We've been keeping all eyes on the ETH BTC chart on the left hand side over here within the falling wedge. We've looked at this for a long time, coming into key support, and again, this will bring a lot of confidence if this does start to break out. I do think it will take time. I don't expect a guard candle out of here to create a new high. I think you'll continue to chop around, but if you look on the right hand side, ETH USD is paying dividends, right? You can see if you did buy near the significant range lows, pink zone over here on the weekly time frame, you broke the structure, you've created a higher lows as well, and this is looking good for a slow grind and continuation onwards and upwards. Okay, Bitcoin dominance also coming down over here. It's not enough to say yet whether the absolute top is in, but the expectation was that a major top for Bitcoin dominance should be forming somewhere around this region, right? Anywhere around this gray circle, which is going to be, between, let's say, where the wick high is now at 58.63%, even up to possibly, in a worst case scenario, as high as 63%. That would be pretty brutal for the overall altcoin market. But at the end of the day, the question is, are you closer to the top or the bottom? The answer is you're closer to the top, which means you can start to look to trade it in the other direction, which would mean a breakdown of Bitcoin dominance, which would mean a rise in the altcoin sector. And that's an inverse relationship, right? Or inverse chart. You have falling wedge on ETH BTC, rising wedge on Bitcoin dominance, and we simply patiently waiting for that breakout. So I'll go through all the altcoins later today as well in whale room. I don't want to waste too much time, but since I'm on the chart, Rollbit coming into a key zone over here, we spoke about it holding the 50% level. You have a possible bump and run scenario over here. Price pushes up, bumps back down, and then starts to run. That's the expectation. If alts are going to outperform, that's kind of what you're looking at over there. I'll give special mention over here to 𝗕𝗘𝗘 as well. There is some crypto influencer KOL on Twitter. I don't even remember his name, but he's relentlessly shilling 𝗕𝗘𝗘. It's fine. We're in since $800,000 market cap. So by all means, shill it. I'll be honest with you guys and tell you where structure does start to shift. So far, he has 𝗕𝗘𝗘 moving towards the upside. It is looking good, but this is major resistance and a range high, which is coming in. Let's just quickly put that back at 0.2368. That becomes the level that you want to see cleared on 𝗕𝗘𝗘 to break out of that range. This could be a reaccumulation range by all means, but it will take time, right? It's got a lot of work to do. If you are looking to reaccumulate, the bottom of the range where you'd want to do that is 0.0060. To give you a market cap, because sometimes that's a bit easier, let's quickly just shift this chart over here. So market cap wise, your reaccumulation zone is anywhere between, $5 and $6 million market cap. And your breakout zone is when 𝗕𝗘𝗘𝗧 starts to break above 22 million. So all the meme coins that I have, at least are on my list in the Whale Room Discord. If you do want that portfolio, remember, this is where you can find it. And that's it from me, folks. I'll catch all of you on the next one. I hope you all have an absolutely lovely day, and cheers for now.